See, it is not necessary that we have to always invest in the stock markets directly. It is also possible to invest in the stock markets indirectly. Actually, nowadays, investing in the stock markets through mutual funds is very popular. We can understand mutual fund as a financial intermediary. It collects funds from the public at large, and then as per their investment goals, it invests on behalf of the public at large. So, the main question that really arises is the $1 million question, or in Indian context, we can say the question of rupees 7 crores, isn't it? Why will I ever invest in the stock markets indirectly through mutual fund when it is so easy for me to invest directly in the stock market? The question that arises is why mutual fund? It is so easy and simple in India to invest directly in the stock markets. Then why will I ever decide to invest in the stock markets indirectly through a mutual fund? I'll give you one simple example, and the importance of mutual funds will become very clear. A very simple example. See, in portfolio management, we have studied that as an investor, we should design a diversified portfolio, right? So we know one thing. We should design a diversified portfolio. Okay. What do you mean by a diversified portfolio? Selecting the best company shares from different sectors, right? So it means selecting best shares or best stock, whatever you say, best shares from different sectors. So let us say we consider the IT sector. I will select the best share in the IT sector, best share in the cement sector, paint sector, banking sector, pharma sector. There are so many different sectors. I want to select the best shares. I want to design a diversified portfolio. Why? Why a diversified portfolio? So by chance, if certain sectors of the economy are not doing well, I may lose money there. But some other sectors may do exceedingly well. So whatever is the loss in one sector, I can recover that loss from the performance of my shares selected from the other sectors. So that's the entire logic of designing a diversified portfolio. And yes, if you have done portfolio management, our earlier topic, you know it very well that a diversified portfolio considerably reduces unsystematic risk. So that is the main reason that we are interested in designing a diversified portfolio. So let's say I want to design a diversified portfolio. Okay. And and now I'll explain you that why mutual funds are becoming so popular nowadays. I want to design a diversified portfolio, but all that I have for investment is rupees 5,000. I want to invest 5,000 rupees in the stock markets, and I want to design a diversified portfolio out of rupees 5,000. Tell me, how will I design a diversified portfolio with 5,000 rupees? I hope it's becoming clear. With 5,000 rupees, it's quite possible I may be able to purchase maybe only one share of certain good companies in a particular sector. Forget about a diversified portfolio. I will not even be able to buy, say, good companies even from two or more sectors. Even that will also not become possible. But if I have 5,000 rupees and if I invest in a mutual fund and the mutual fund is designing a diversified portfolio, I can enjoy the benefit of diversification just in rupees 5,000. I hope you are able to appreciate the importance of a mutual fund. Mutual fund is collecting 5,000 not just from me. Mutual fund is collecting 5,000 rupees, or we can say small sums of rupees, from the public at large. And then it is able to build a huge corpus. And that corpus will be used to design a diversified portfolio. So you know what will happen? Just by investing 5,000 rupees, I will reap the benefits of diversification, which through direct investment in stock market would have never ever become possible. Right. So this clearly signifies the importance, or rather, I will say the rising popularity of mutual funds. Even with small sums of money, I am in a position to enjoy the benefits of investing in the stock market. Otherwise, it's quite possible that I require, let us say, 5 lakhs of rupees for designing a well diversified portfolio. So if I'm rich, if I'm wealthy, then I can design a diversified portfolio, enjoy the benefit. But what for people like you and me? We have limited resources to invest. Does this mean that the benefits of stock market, or rather I will say benefits of diversification, should be available only to those who have the necessary resources? What about people like us who have limited resources? Shall we not enjoy the benefit of investing in the stock market? I also want my money to grow. I am ready to take well calculated risks, but yes, I don't have enough money. Does this mean that stock markets are only for those who are rich? It cannot really be in that way. And that's where a mutual fund plays a very crucial role. It is collecting money from like-minded people at large, building huge, what you can say, huge corpuses, and then investing the same. So one of the classical advantages of mutual fund is I can start enjoying the benefits of diversification even if I have limited money to invest. This is one of the biggest advantages of a mutual fund. Second advantage, professional management. See, a mutual fund will be managed by a fund manager. Fund manager is the person who is 100% involved in the stock markets. For majority of us, this is an issue. We cannot give 100% of our time to the stock markets unless and until investing is the way in which you earn your bread and butter. But see, for most of the people like us, we already have our own source of income, right? We are already doing something else, let's say, for our living. Now, I cannot do my job, or let's say if I'm into practice, I cannot do my practice and simultaneously also track the stock markets. Which are the best companies to invest in? A lot of research goes into it. Do you have the time and expertise for the same? Maybe you are a student of commerce and that's the reason you can understand the P&L and balance sheets really well. So maybe you might be able to do some kind of research. But can we really do that kind of research all the time? See, investing in a particular company is one thing. How to manage that investment is something else. When to exit from that investment, that is altogether another story. So it's quite possible you may have the expertise to do equity research, but you may not have the time. Or you may have all the time in the world, but you don't have the necessary expertise. So professional management is yet another, right? It is yet another advantage of a mutual fund. The information that a fund manager has, you and me will not have that kind of information. For example, let us say you want to invest in shares of Reliance. Let's put it that way. You want to invest in shares of Reliance. Is it possible for you to actually call up the management of Reliance, tell the management that I want an appointment with you? I want to understand what are your future plans. And on the basis of that, I want to decide whether I should buy 10 shares of your company or not. Of course, the money that I'm going to invest in that 10 shares matters a lot to me, but you are not going to get these kinds of appointments. But what if a fund manager wants to pick up 5% stake in Reliance? I'm giving a hypothetical example. Let us say he wants to pick up 5% stake in Reliance. The fund manager will definitely get the necessary appointments. The fund manager can sit with the management of the company. The fund manager can ask them tough questions, and once convinced, will go ahead and buy the shares. So the information which is available to you and the information which is available to the fund manager, there's a lot of difference. And that is the reason Yet another advantage of investing in a mutual fund is professional management. And understand this professional management is available at a very low cost. Yes, a very low cost. SEBI has made it compulsory that the management cost of a mutual fund should not exceed 2.5% of the assets which are under the management of the fund house. So you can see professional management available at a very low cost. That's yet another advantage of a mutual fund. If I have 10 lakhs of rupees to invest, if I have 15 lakhs of rupees, or let's say huge sums of money to invest, I can also privately engage a bank or privately engage a person who can manage my fund, right? It's very much possible. But again, as I said, you require huge sums of money. Only then professional management will be available. So if you are managing a huge, say a huge portfolio, then there are people who will manage it for you. But as I said, I have limited sums of money to invest. Still, I want benefits of diversification. Still, I want professional management. Still, I want that the cost should be low. All these criteria are getting satisfied if I invest in a mutual fund. So that's the, what we can say, the reason that why mutual funds day by day are gaining more and more popularity, not just in India, but worldwide. So these are the certain advantages of investing in a mutual fund. That does not mean that there are no disadvantages of investing in a mutual fund. There are. The biggest disadvantage of a mutual fund is it does not provide any guaranteed return. See, you are still exposed to the vagaries of the stock market. You put your money in a mutual fund, no mutual fund can guarantee you that this is the return that we can provide to you. So I cannot compare a mutual fund with a fixed deposit. When I put money in a fixed deposit of a bank, I know what is the exact rate of interest that I am going to earn. So the return is guaranteed. But again, when I put my money in a mutual fund, nothing is guaranteed over here. Because see, ultimately the mutual fund is also investing in financial, or we can say capital market instruments. Capital market instruments will definitely go up and down, and so will the return from a mutual fund. If you have watched any advertisement of a mutual fund, just a second. If you have watched any advertisement of a mutual fund, then you will definitely be aware of this, right? Once the advertisement gets completed, or if it is in the print media, they always give a disclaimer. Have you ever watched a mutual fund advertisement, right? At the end, there shall be a disclaimer. What shall that disclaimer mean? What normally is the disclaimer? They do say that mutual funds are subject to market risks, right? Please read the offer document carefully before you are making investment. They make it very clear that see, the past return is not guaranteed. It may or may not get repeated. So yes, whether you are directly investing in the stock markets or you are investing through a mutual fund, chances of losing money are definitely right. So no guaranteed return will be available over here. Just as when I make direct investment in stock market, my return will go up and down. Similar will be the case even when I invest in a mutual fund. But still, I am definitely protected by the professional management of the mutual fund. So if a mutual fund is professionally managed, if a mutual fund is managed by a fund manager, and that fund manager is really a strong person, then it's very much possible that even though when the markets are going down, your mutual fund investment will be down, but quite possible that the return, or rather I will say the downward movement in the mutual fund is a little bit less than that of the market. But yes, this advantage is definitely there when you are investing in the mutual fund. But overall, when we, what we can say, summarize the mutual fund, yes, people who do not have the time, people who do not have the expertise, people who do not have the resources, they should definitely invest in the stock market through a mutual fund. right? Instead of simply not investing at all, mutual fund definitely turns out to be a good way of investing your hard earned.